I'm Charlotte McLeod with investingnews.com, and here today with me is Lynette Zang, founder and CEO of Zang International. Thank you so much for being here. Always great to have you.
Always happy to be here, Charlotte. Thank you for having me.
Of course. And we're catching up from our last conversation all the way back in October. So the landscape is looking a little bit different right now. Where I thought we could start is, as usual, with gold and silver. So going back to the beginning of the year, we saw the big run up, record prices. We've seen a pullback since then, especially since the Iran war began. I wonder if we can look at what that price activity is telling us about what's happening in the world today.
Well, actually, the big runoff was caused by traders, right? And contracts of gold and silver, both of them, to severely overbought, not overvalued, mind you, but overbought levels. However, your question is, what is that telling you? Well, really, silver is the fuse, or even you could think of it as the canary in the coal mine. So you saw how rapidly silver went up to really extremely overbought levels, something like 77 or 80% above that 200-day moving average, when 10% is a lot. But silver tells you that something is going on. Now, gold is the anchor. And so gold's rise is more steady. But again, what we're looking at here are contracts, spot contracts. It would be much easier for me in my job if whenever the talking heads referred to gold and silver as actually being the spot contracts, of which there's an unlimited amount. They can create as much as they can. But what I really want people to understand is it's a shakeout. It's telling you that we are at the end of this currency's life cycle. Silver is that fuse, so it is a lot more volatile. Gold is the anchor, and I can promise you, I can give you this guarantee because it happens every time. Can't give you a lot of guarantees, but I'll give you this one. At some point, both gold and silver, the real stuff, not the contracts, will go to their true fundamental value, as all assets always do. But yeah, it's triggering the end, and I think it's pretty obvious. Oh, excuse me. Wow. See, it's true. I sneezed when I was saying it. But we are clearly, in my opinion, we are clearly in World War III. And I think that's a lot of what gold and silver are telling us.
Well, and what a way to start an interview today. I think that's quite a statement, and we'll unpack what that means. I wanted to talk a little bit more about what's happening with gold, especially during this time of war. So we've had the Iran war began, and I think that people look at what's happened. They wonder, why is the price going down in such a time of turmoil? I was wondering if you can weigh in on that. And another question I see people having is central bank selling. We've seen central banks that have been big buyers. Now they're actually selling, at least some of them. So what do you make of all of that activity?
Well, the first part of the activity, again, this is every single asset has been turned into a trading vehicle. And if you look at the level of profits from the banks in their trading portfolios, I really hope people can realize that the 33 different users of physical gold, or the 36 different users of physical silver, did not evaporate. They still use gold. They still use silver. The difference is in the contracts, not the physical metals. And that really does create more of a buying opportunity for you. So just like we've been taught to buy the dip because the central bank's going to have the markets back, I'm going to tell you, it's the same thing, but you want the physical. You don't want the contracts. You just take advantage of it because not everything even moves with the contracts. Raw stuff like this happens to be a pre-33, but this is a piece of bullion. This stuff will, but look at the premiums that are being paid in the Asian markets or elsewhere in the world. It's because demand exceeds supply. And I would say the same thing is true with the silver, and maybe on some levels even more so because of all of the data centers, et cetera, that are really relying on this silver. So the demand is actually there for the physical. And we are in that transition into where valuations matter, and we are moving closer to a true supply demand market, not just in metals, but also in oil, with what just happened with the UAE pulling out of OPEC and OPEC plus. I mean, they were the price mechanism for oil. And, how many times have we now seen, we saw it in 2020, and we're seeing it again recently and a lot in Europe, where you have negative contract rates on oil. Well, wait a minute. Did that just evaporate? Did the demand evaporate? No. It's a trading market. It is not real. So the key really is in understanding the true value of all of this stuff, whether it's gold, silver, oil, stocks, bonds, any of it, debt, any of it, knowing the true value and then putting the lion's share of your wealth in something that is undervalued in a positive trend. The Federal Reserve tells you what the true value of this is. Look on the purchasing power chart and you'll see on the left-hand axis a big fat zero. That's true for any government debt-based currency. So anything that can only be converted into that currency, that's true for that as well. Even though we're in a stock market melt up phase, if you can only convert it into this and it has no value, like this 100,000 Indonesian rupiah, right? I can't buy anything with this. Doesn't matter that there's all those zeros there. So I cannot stress that enough, that people need to start looking at these markets just a little teeny bit differently so that you can start to see the truth of what's happening. So that was the first part of your question. What was the second part?
The second part was about central banks selling gold because, so any thoughts on that?
Absolutely, because we haven't seen a mad rush of central banks actually selling gold, but the whole purpose of gold, it is a savings vehicle. So much as we saw in 2020, and for me personally, I'm holding up one piece of my savings, right? If I have an emergency and I need money and I don't have it anywhere else, this is what I would sell. Not this, mind you. But that's what the gold is for, to fill in those fiscal holes. We saw Russia do it tremendously once they were kicked out of the SWIFT system. We've seen it over and over and over again. But it doesn't mean that things are getting better. It means that these countries are fiscally constrained and they need the only asset. They need to sell the only asset that the market will actually buy, and that's gold. But we're not seeing everything that's happening behind the scenes. And if anybody thinks that they actually know what the central bankers are really, truly doing and why they are really, truly doing it, there is this bridge in Brooklyn that I don't really own, but we could talk about selling it, right? So you need to understand, this is savings. You cannot fix a too much debt problem with more debt, but you can solve it with savings.
So many good points there on what's actually going on with the central bank. So thank you for going into that one. And I want to return to the point you were making about the recent news that we have the UAE leaving OPEC. So it is pretty recent news. It's coming up soon, that departure. What is the significance of that for the oil market? Can you talk a little bit more about that?
Yes. It was January of 2025 when the new trend toward true supply and demand markets, where the paper markets were not dictating the price of everything. That trend began with both gold and silver in January of 2025. When I'm looking at the UAE's recent move to break away from OPEC and OPEC plus, that is furthering that move into a true supply and demand market. Does it make any sense for you to pay somebody to take oil when we need so much oil? No, it doesn't. But traders, those are contracts. They don't mean anything. So when I'm looking at what's happening, the UAE is saying, you know what, this is not to our benefit to go along with constraining the price of oil and managing that. We want that true supply and demand market because the prices are going to be much, much higher. And they were this morning when I was looking at it. But those are contracts, and they can go like this depending upon whatever the trader's whim happens to be. But you can't move oil that quickly, just like you can't move physical gold and silver that quickly. It doesn't move that fast. So for me, this is a continuation of the trend that started in January of 2025. And it's just another, another piece to fall into place, taking us from a paper trading driven market into ultimately the true supply and demand driven market. And that's what I applaud, and that's what I'm looking for.
Very interesting to hear about it in that context. The other point I wanted to raise about oil with you. So we've seen all of this price volatility with oil. It's raising concerns about inflation. And we've talked before about your concerns about hyperinflation. So I wonder if you can contextualize that as well. Is this kickstarting us more toward that direction, or how are you seeing it?
Oh, well, 100%, because oil is used in the production of everything, including fertilizer for food. And just recently, these pieces are all just kind of going click, click, click. Because Charlotte, I pay a lot of attention to consumer confidence and sentiment because this is a con game and it requires that confidence. And we just recently saw consumer confidence drop to the lowest level ever since they started tracking it in 1952, which was right after the US dollar took over as the world reserve currency. Coincidence? I don't know, but just that's when they started tracking it. So that is not good. And further, going back to the oil and kind of putting that back in the mix, it's all about country to country confidence now. You had that group that were working in a concerted effort in a synchronized manner, and they're not anymore because they don't have confidence in each other to have each other's backs or best interest, right? So consumer confidence is critical in keeping all of this together. What do higher oil prices do? They push more rapid inflation. Well, if you've already got consumer confidence that's at the lowest level, and it's the consumer that's holding this whole thing together, and yeah, even though they're doing so badly, they just keep taking on debt and debt and debt and debt and debt to sustain a standard of living. Can they do that forever? They could do it until nobody will give them money, till they can't repay the debt that they have, and then they start to get cut off from the credit markets.
The other point on inflation I wanted to ask you about so we're seeing it in oil prices right now. We know that's going to spread. How do you see that spread playing out? We were just talking right now this morning in the office about sulfuric acid prices and how that plays into food prices. So how could that play out for you?
Well, it goes into everything. It's not just at the gas pump, but it's also, into the food, which is, I'm keen on everybody being as independent as possible around food, water, energy, and all those other. And look at this: food, water, energy. We're talking about energy. These push prices for everything up. Everything. What do you think that does to consumer confidence? And if we're dependent upon the consumer to keep this going, this even has impact on the higher end consumer. Maybe not those at the top of the K, maybe not there, but that it has an impact on everybody. The expenses to travel are huge. Fuel prices, ticket prices have gone up tremendously. And yet I'm listening to a report this morning saying, well, people are saying if I don't travel now, when am I going to travel? So they're pulling the travel that they were going to do forward until they can't anymore because there are limitations. And I think that the higher the inflation is, the faster we reach those limitations. And I think it's going to be like hitting that brick wall.
The other element I wanted to draw in when it comes to oil, and I think you're going in this direction already, is the petrodollar system. So I believe since the Iran war has started, we've actually seen some strength in the US dollar, but we've also been seeing oil transactions taking place in different currencies. So what do you see coming there?
Well, quite honestly, when I look at Saudi Arabia, but actually the degradation that the UAE leaving the OPEC and OPEC plus is a degradation of the petrodollar as well. And again, it's just another piece that erodes the U.S. I mean, I don't know. Is the U.S. still in its exceptionalism phase? Does the world still want to, work with the U.S.? It's kind of interesting being an American and traveling overseas these days, and the difference. Like I remember a time. Well, I was 38, and I'm 71 now, so that's how many years ago that was. And I was in France, and when I went to the markets, they wanted dollars. They'd give you a discount if you paid in dollars. They didn't want francs at that time, right? You can't do that even going to Mexico. You can't do that anymore. So, the dollar dominance and the dollar and the U.S. exceptionalism, I don't know if it's 100% over yet. I don't think so, but it's down a bunch of notches, I would say.
I see what you mean. So all different pieces of this same puzzle.
Exactly.
So we've been talking about these concerns people have about inflation or even hyperinflation. The other angle I've been hearing from some people is that we could actually go into a deflationary scenario if we get demand destruction, that type of thing. I wonder what you make of that kind of scenario. Is that something you could see playing out, or what do you think?
Well, actually, deflation is the other side of the coin of inflation. So usually, yes. So if the job market implodes, that's deflationary. If the stock market implodes, that's deflationary. If the real estate market implodes, that's deflationary. And there's only one way to fight it, and that's with inflation. That's the only tool that they have. So typically first there is deflation, but then there is massive inflation. And over all of the money printing periods, particularly since 2008, they print more and more and more. I mean, look what they did in 2020, but it's like pushing on a string. It just does not have that same level of impact. But what it does do, and what all of that money has done that's been pushed into the system since 2008, it sloshes around in the system. It goes back to the first conversation that we were having with trading. So it's over here, and then that money moves over here. And so what's really moving the markets is not really new money. It's the flow of funds. Where is that money pouring into? Right. I warned my listeners when spot gold and silver were running so rapidly and going to those extreme levels. I know this is fun. I do. I get it. And I get that you've been waiting so long for this. But Wall Street will never, ever, ever tell you the truth of any level of valuation. There was a day many years ago that they were an appropriate reflection of what was happening with assets and in the economy. But once everything, water, energy, fuel, food, everything was turned into a trading product, that's all that this market is about. So, I guess my concern is that people can't see that they believe the lies. And after all, how many times can you be lied to and you don't know the truth?
Exactly. I wonder, so we have all these things going on in the economy, and we're coming to our Fed chair transition is coming up soon. We have Jerome Powell on his way out, Kevin Warsh coming in. We talked about this a little bit the last time we spoke. Do you see any big changes as we have this transition, or does it not really matter that much in the context of everything else that's going on right now?
Well, I don't think that anybody is going to be able to save this system, because it's just like saying, okay, you're 105. Let's see, can I change that? How can I get another 105 years out of life? No, when you're at the end of a life cycle, you're at the end of a life cycle. But do I expect any big changes? Well, I was listening to Kevin Warsh in front of the Senate Banking Committee, and he said that he had a different definition for price stability. And so my ears perked up, right? Because the current definition of central banks' price stability is inflation moving slow enough that the public does not change their spending patterns. Rather, they simply take on more debt to attempt to sustain their standard of living. So when he said, I have a different definition, I was very keen on what is that definition. And what he said was that prices move slowly enough that people don't notice it. Seems like the same definition to me. So the only change that I expect to see, because what can they do anyway? I mean, the tool is interest rates and printing money. That's it. So the debt is so extreme, even dropping it back down to zero, does that help that debt go away? No. When we had that opportunity, rather than retiring debt, and I'm referring to corporations as well as governments, we all just borrowed more. We didn't retire it because it took the same amount to service a higher level of debt. You cannot fix a too much debt problem with more debt. We have to shift into a new system. And that's what they're working on. And that's, frankly, what I'm working on too. Because this is the opportunity for the public to take their power back by putting redeemable gold back in the system again. That's what puts the power back in the public hands. We have to get involved at a local level. We have to make our wishes known. But I don't see the big super PACs for these AI companies, these tech companies that, I'm sorry, their job, the lobbyist job, is to buy politicians. And I'm sorry, but I think in many cases, I'm not going to say all because I don't know this for sure, but their job is to be bought. Well, wait a minute. Whose job is it to take care of the public and put the public's best interest first? It's the public's job. Nobody's going to do that for us. We have to do it. So let's do it.
On that note of how you're getting prepared, when we had spoken in October, you mentioned, all right, so you have your plan B set, and you were starting to even think about a plan C, which I think was still early at that time. I wonder if there have been any developments on that plan C that you could share with us today.
I have been doing a lot of traveling. No, I have not added another residence yet to my portfolio. But I'm considering it still. So, these things don't turn on a dime. And I will tell you, I would probably feel a lot more urgency if I didn't have my plan B, to be honest with you. But I am going to be doing an event for the Nomad Capitalist. So I will be back in that environment coming up soon. But it's just kind of traveling and seeing what what feels like home. Where could I create my plan C? And I have some thoughts on it, but I don't have anything definitive.
Well, I think that's a big decision to go looking for a place where you might want to have another citizenship. So we'll check in on that later, I'm sure. So you've been doing a lot of traveling. What is the sense? I know you are also very big on community and being in connection with people. What types of things are you hearing? What types of questions are you answering for people right now? What's on people's minds?
Well, it seems to be like nobody really knows why the inflation is so high. Honestly, all I have to do is show them the purchasing power chart. That's the thing, especially being in front of audiences that are different than the audiences that are listening to you and me, right? Because if they're listening to us, they have some level of awareness of what's going on. But speaking in front of audiences that really are not familiar with this, they've just been off living their lives. It is the discomfort that many people are feeling, not understanding why the inflation has to be this high. Now, having wars gives the government a good finger to point and say, oh, well, it's not us doing it. It's the war over here doing it. But the other thing that gives me a lot of hope is I am seeing a lot more awareness by younger people. Right? They bought into, they never really bought into the lie, because by the time it got to them, I think more of the truth was coming out. I mean, here in America, the lie was, if you just stay in this lane, you work hard, you get a good education, you're going to have a nice retirement, you'll be able to buy a house, you'll be able to educate your children, you'll be able to take a vacation, you'll be able to do these things. And people all around the world, it's not just in the U.S., but it is also in China and many other parts of the world, where this younger generation that was told, well, just do this and you'll be fine, has discovered that that's not true. And so now they're really seeking answers. And they're actually seeking gold and silver, so I'm very, very, very excited about that. And I'll tell you something else, because I travel with my dime cards. I can't even tell you how many I've given out, because it's been a lot. But these are the dime cards where on this side is a dime that was minted prior to 1964, and it has all silver, and you can see that on the rim, like the image on the screen. Whereas the other one, you can see that base metal, the dime that was minted after 1964. That happened to be our cost on the day, February 27th, when we bought that one dime. And so what I will do is, if I see a family with, kids that are maybe at least 6, 7, 8, 9, 10 years old, I'll walk over and I'll ask the parents if it's okay if I give their children something. And then I will give them the dime card and I will explain it. The level of interest that I see first in the young kids, because after all, this is money. And a lot of kids, even when they're little, they like coins, right? But then the parents get engaged, and their grandparents, if they were my age, they remember when silver was in there, so in the actual coinage. So that to me has been really exciting, because I know those dime cards are now in Tokyo, and they're now in Germany, and they're all over the world, and we're spreading the word. And I'm hoping that at some point, when we've distributed enough of them, there will be a tipping point, and we'll have a movement, a sound money movement, solidly in place. I mean, we do now, but we're still in the infancy stages. We have to create that awareness, and that's what I'm seeing. People know something's wrong, and all you have to do is show them what it is, which is that loss of purchasing power in this stuff that's dictated by governments and corporations.
I think all of that makes a lot of sense. There really is that sense of disenchantment among young people. And I think you're also right. It's the disenchantment is there, and then you have to show what do you do with that. And I think that connection could really bring people into this space. So will be interesting to watch moving forward. We can start to wrap it up. I know that you're always really paying attention to what's going on under the surface, things that we might not see. And we've done a lot today talking about current events. So before I let you go, are there things that you're watching that people might be less aware of that you think we should be paying attention to right now?
Well, 100% you need to be paying attention to confidence, the confidence numbers, because that's what's keeping this whole thing together. And when we get this more rapid inflation, we're already very vulnerable in the consumer confidence and the public confidence numbers. That's what's going to usher in the visible hyperinflation that will take us into the next crisis. But, you know, governments need wars. I mean, there is everything that typically surrounds a currency regime shift is taking place right now, whether you realize it or not. And they are not disjointed. They are all interconnected. War, inflation, markets, currencies. I mean, it's all interconnected. So don't look over here without looking over here too, because that's why they create the confusion and all of these different things that are flying around. Because if you're distracted over here, you're not paying attention to what they're doing over here. They're building that infrastructure for cryptocurrencies, for the digital, for the full surveillance economy. They're building that no matter what the markets are saying in the cryptocurrency markets. Why isn't Bitcoin at new highs? Why aren't they? Right? The infrastructure is being built. It's very concerning to see. They'll distract you over here. And also, what does a confused mind does? It does nothing. So you're stuck in this paradigm when they're getting ready to shove you into a new system that will not be in your best interest. But you've got to pay attention to it and not think, well, this incident, like the UAE leaving, is disjointed from the move that we saw in gold and silver. No. And even the paper move in gold and silver that we're seeing, they don't want you to own physical gold and silver, because as soon as you do, you have an asset that runs no counterparty risk, which means they can't transfer your wealth so easily.
Well, great place to wrap it up. Thank you so much. Always good to talk to you, and especially when we're in a very tricky world situation as we are right now. Thank you so much, and hope to have you back soon.
Absolutely. My pleasure. Thank you for having me.
Of course. And once again, I'm Charlotte McLeod with investingnews.com, and this is Lynette Zang with Zang International.
Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.